Bitcoin is the first monetary asset that is not intrinsically. Most investment strategies don't work. There is one winning strategy that's going to work. How does this compare to everything else you can buy on that chart? You could think of Bitcoin as the apex commodity. The top competitor would be gold, worth $10 trillion. And if Bitcoin's digital gold, and it's better than gold because it's got an absolute supply cap. The production is rapidly approaching zero. After 2035, there effectively isn't any material new production of Bitcoin for the next 100 years. Bitcoin is gold without the liabilities and the risks of gold. Gold is going to have systemic inflation. Miners are going to make more gold. It's hard to audit. It's very difficult to transfer. It's expensive to custody. It's very expensive to authenticate. Those are all the liabilities of gold. We know about that. Now, Bitcoin solves that problem, but it enhances gold with digital audit, digital transfer, digital custody, decentralized robustness, integrity. It's got a global utility and appeal, and technology industry is enhancing the value of Bitcoin. Even right now, you can download dozens of apps that handle Bitcoin. You can't download any app that moves gold around. That's why Bitcoin is the apex commodity. Bitcoin's also the apex property. You could think of it as Cyber Manhattan, 21 million blocks in cyberspace with appeal to 8 billion people worldwide. The top competitor in the property market is New York or London or Paris or Tokyo. And if you owned a city block in New York in the last 100 years, you probably made a lot of money. But the problem with owning buildings in New York is you have maintenance cost, depreciation, zoning risk, property tax, physical nexus. You can't move the building from one city to another city. It's immobile. It's illiquid. And if you want to sell or buy the building, you have to sell it all at the same time. And it's very expensive to do that and it takes a lot of time. So Bitcoin improves on that by creating a building that's indestructible, immortal, immaterial. You can scale it. You can buy it $37 at a time. You can move it with high frequency. It's portable. It's global, universally desirable. So Bitcoin is better property than any kind of physical property. But Bitcoin's also the apex technology. It's a bank in cyberspace run by incorruptible software. It's open to everyone on Earth. So you could think of it as digital finance. The top competitor in technology is Apple. But what if I could actually have a digital monopoly that's global, that everybody wants, but without the management team, without the employees? The management's never going to screw up if there is no management. You've got corporate taxes and tariffs and product cycles, because Bitcoin in 100 years is going to be 1/21 millionth of all the money in the network. It'll be the same 100 years from now. It may be the same 1,000 years from now. So getting rid of product cycles and getting rid of all the liability risk that comes with corporations, is a big upgrade for Bitcoin. And there's really no operating risk or execution risk because it's just running itself in a timeless fashion on a global basis. Some people invest in money. And what's the top competitor? The sovereign debt, the bond. So the US Treasury bond is the treasury asset for most corporations, most governments. But Bitcoin is digital money. And so it's a non-sovereign bearer asset. It serves the value of a bond, but it doesn't have systemic inflation or counterparty risk or mandatory custodians, and it doesn't have the real problem, negative real yields. If the monetary inflation rate is 7 or 8% and the bond pays 5%, the after-tax yield is 2 or 3%. So it means you've got a negative real yield of 5%. Which means your money's going to go away. Bitcoin, on the other hand, is digital. You can self-custody it. It appreciates much faster than fiat, and it allows you to escape the local currency risk. So, and it's the longest duration asset. It doesn't expire. Bitcoin's going to be the apex ETF. You could think of it as a global monetary network. It's the first ETF that's based on a synthetic asset with an absolute fixed supply that also has global appeal. It's competing against the S&P index, and it competes against some other monetary ETFs like GLD or BOND or the NASDAQ index. But ultimately, Bitcoin is destined to rise above them as the global index because it doesn't have asset inflation. All these other indexes have asset inflation. Bitcoin's the only ETF and the only index that is absolutely capped. And if you combine that with the global brand appeal, the lowest investment risk, the best growth drivers, the best tax treatment, the longest holding duration, what you've got is the winner. Bitcoin is the first monetary asset that is not intrinsically defective. active. This chart is the return of the Magnificent Seven, or 7 stocks versus every other stock in the S&P 500 index. And what you can see is the index might be up 11%, 7 stocks are up 53%, everybody else is zero. 99% of the companies are failing to deliver any shareholder return. At 99.9% of these companies, they're not beating inflation. Most companies cannot grow their cash flows faster than the monetary inflation rate of 7 or 8%. So they have to rely upon expensive buybacks. They have to buy their stock back. They have to dividend out their cash flows. They do acquisitions to try to get more growth non-organically. Or they load up on debt and they leverage up their balance sheet and buy back their shares with debt so that they can get that shareholder EPS to go up faster than the 7% number. And of course, that's the standard finance playbook, but they end up decapitalizing and giving away all of their cash flows. They amplify their risk. They create chaos and confusion. It makes them fragile, makes them hard to manage, prone to failure, prone to bankruptcy, and very vulnerable to takeovers by hostile competitors. That means this equity is just impaired by unavoidable risk and liability. The typical stock portfolio is going to get that 7% return. And on the other hand, over a long term, I would expect that Bitcoin will return 14% because Bitcoin not only doesn't have the risk and liabilities of a company, it doesn't struggle with all the problems companies struggle with because it's not in the real world and it doesn't have physical nexus or political nexus. But also, Bitcoin has all the virtues of a pure crypto decentralized network. It's cybernetic, digital. It's immaculate in its conception. It's immortal. It's incorruptible. It's global. It's indestructible. And so you can imagine as a technology idea or an investment idea, you're just always going to have an advantage over mortals doing things in the real world. There is one winning strategy that's going to work. And the one winning strategy is hold the apex asset for a long period of time. And so Bitcoin is that apex asset. That's how you beat the market. This is Bitcoin performance versus other assets since August of 2020. This is through yesterday, or 2 days ago, November 8th. Bitcoin's up 199%, and while the world's in chaos and there's a lot of inflation. The S&P index is up 30%. The NASDAQ 24, gold is down 4%. Silver's even worse because silver's easier to manufacture than gold is. It's less scarce. And bonds are even worse than silver because bonds are just governments printing money. Most investment strategies don't work. If you look at the returns on the S&P index, if you held a portfolio of stocks for 30 years, you would get 7.8% return. If you missed the best 10 days or 1 day every 3 years, you'd get 5% return. If you miss the top day each year, the best day or 30 best days, you get 1.6% return. And actually, there's only 50 days, or basically 2 days out of the 30 years. And if you missed the right ones, then you got no return. You lost all your money. So you have to guess which 2 days each year are going to perform, or which day each year is going to perform in order to actually outtrade the market. If you adopt the Bitcoin strategy, then you can use Bitcoin to fuel your growth. So when MicroStrategy invested that $250 million, Bitcoin was maybe 11,000 a coin. And then about a month later, Bitcoin lowered, it actually decreased to about 9,500 or 10,000 a coin. And everybody panicked except us. We doubled down. So you can see MicroStrategy stocks up 284% through November 8th versus Bitcoin up 199%. So we were actually boosted by our Bitcoin strategy. And you can compare us to all the big tech companies, the Magnificent Seven like Google, Microsoft, Apple, etc. Bitcoin outperforms them all, but we're able to outperform even Apple and Google because we're using Bitcoin as the slingshot. Even if you're a monopoly or a dominant player like Amazon, there's no safety. And if you look at enterprise software companies, none of them can keep up with Bitcoin or us either. And so Bitcoin clearly gives you an advantage if you just dollar cost average and stay consistent. 199% implies about 40 to 45% compounded annual growth rate. So Bitcoin's growing at 40% while that S&P is 7-8%. So that's a high growth Bitcoin. And it's growing faster than that mature rate. And it's growing faster because of monetary inflation, global unrest. Adoption is being driven by these massive inflation and global unrest. And so as people reallocate their capital from real estate and stocks and other assets and currencies, so you're getting an avalanche of retail adoption. You'll get more with a spot ETF. You'll get more institutional adoption with clarification of the ETF and accounting rules, etc. Imagine what happens when Apple Computer is buying $1 billion of Bitcoin a month, or what happens if Microsoft. So I believe we'll see that kind of adoption over the next 10 to 20 years. That will drive growth faster. And then when everybody understands Bitcoin as well as they understand the S&P index, or as well as they understand commercial real estate, then we'll probably slow down to like a 14% or something. Now, over a long time horizon, laser focus is rewarded. The point is, think out 100 years. If you had $1 million, if you invested it in cash at a 7.5% or 7% degradation, you're going to end up with $900 worth of value left after 100 years. If you invest $1 million in bonds at a 5% pre-tax or a 3.5% after-tax yield and hold it for 100 years, you will lose 96% or 97% of your wealth. You'll go from $1 million to 31,000. If you invest in the S&P index, you're just going to have the same amount of money after 100 years that you started with. If you were to split that portfolio between the S&P index and Bitcoin, and this is assuming 7% for the S&P and 14% for Bitcoin, and assuming 7% monetary inflation, you're going to convert $1 million into $512 million. If you simply invest the entire amount in Bitcoin, you're going to go from $1 million to $1 billion. It's 1,000x. You're going to double your money 10 times. And it is economic armor. It will protect you from the economic wars to come. So I'll end with the point on the future, which is the near-term catalysts are going to be fair value accounting, the Bitcoin spot ETFs, and the halving. They're all coming. The world is going to reevaluate all these assets, and they're going to demonetize the other assets and shift them into the Bitcoin asset class. And when Bitcoin replaces gold, it should 30x from where it was. And when they replace all of the other assets, there's no reason why it can't 500x. So in summary, no country can stop inflation. The companies can't outgrow inflation. Workers can't outwork inflation. Few are going to beat the market by skill or luck, but everybody can buy Bitcoin.